Good things come to those in life that are what? Patient. Do you have patience? What I see a lot of traders struggle with, and they fail time and time again, is the fact is they are always needing to be in a trade. They think every setup is an opportunity. I think that people, when I come across people like that, it clearly shows me that they can't read the market. So this is why I always state, if you struggle with reading, okay, please do not put your money on the line. If you cannot understand the charts and feeling as if you always have to be in a trade, all right, the moment the market tests any particular zone, whether it's high probability or low probability, there are things that must unfold. Okay, when the market taps into a zone, you have to play out the series of events, the steps that take place in a strategy. Now, my strategy and how I trade works because, there are clearly, individuals that are part of our Discord community that trade similar to, have spent time educating themselves through the video content that are elite members, part of the channel here, which joined the private community and have picked up on the way that I actually trade and the strategy I use. And most of them, a lot of them have actually taken the strategy themselves. I've said this many times before and added their own twist on it. In life, we have to go about finding things that work for us and making them work. But where the problem lies with lots of traders, especially beginners, or even those that have been doing this for some time. I mean, I've come across people that have been trading for, 3, 4, 5 years, and they're still not profitable, which, I can't quite understand that. I think when I come across traders like that, or speak to them, or they reach out to me, and even through the YouTube platform, posting comments or DM me, it's just a matter the problem is, and what it stems from is that they have jumped from one thing to the next and clearly didn't stick with something that works. Now, I'm not saying everything does work. It's up to the individual, the person, to really kind of weed through stuff. And when you find something that works, stick with it. Stop trying to add additional, flavors or ingredients to the recipe. If it simply works, then stick with that. Simplicity is what I found that worked for me because I made things so complex from the beginning. Okay. Because I always thought in my mind that there has to be something more than just this. But what I found out in the end was what I was missing was simply being able to read the charts. And a lot of people think that, that they're great traders, or they could trade just because, they have a strategy and it works, X amount of times, whatever the case is. But the reason why they fail a lot of times is because they cannot read the market. All right. If you really want to take your trading to the next level and you really want to become profitable and you want to make money and you really want to be in this business for the longevity, then learn how to read the charts correctly. I'm talking about market structure. And that's what a lot of people, they fail at doing, is simply being able to determine the direction of the market. Yeah, you can see, at any given point that, the market is moving to the downside, but are you really fine tuning to see, are there opportunities just because the market is moving lower to where, it's bearish? Why are you taking bullish trades? I hear that all the time. Because you aren't able to see things the way that a more experienced individual may possibly be able to see it. Okay. And I'm not saying that you won't ever be able to, but it takes time to be able to get there. But you have to have an open mind and just an open concept of being able to look at when trading and two different directions. Okay, just because the market is bearish doesn't mean there aren't opportunities to take longs, and just because the market is bullish doesn't mean there aren't opportunities to go bearish. And that's fine if you are a one-directional type person, to where if the market is just bearish, you're only looking for opportunities to go short, right? That's fine, because I talk about that most, in just about every video, because to me, that's how beginners should really start off. In time, as you become more experienced, you'll see other opportunities in which you can take, say, counter trend 2. Okay, the market is bearish. You see a bullish opportunity setting up on a demand zone resting below as the market is moving lower. Yeah, if you get the rejection and you see where you can take a trade back up to a certain area and get into a trade and scalp it and make some profit, then do it. I do it every single day. And people always scratch their head, why you take a trade going long when the market is bearish? I talked about this in multiple videos. And I think a lot of people just aren't spending time watching the videos. So if you're jumping around and not watching the videos in this channel, then that's why you're clueless. Okay, so getting back to what I was trying to say about being anxious, you know, a lot of people are just so clicky trying to get into a trade, always feeling the need that every opportunity is going to work. The opportunities that are going to work are going to be the ones that when you finally are able to restructure and understand the directional movement in which you should be taking those trades back up to. So I'm just going to go over today on the chart here. Just, you know, right now we see the market in bearish mode, right? Okay, we're going to look at breaker structures just simply real quick because I want people to be able to see that at any given time, the market can shift direction. So I talk about this, if the market shifts direction from being bearish to bullish, then we need to look for longs, right? Okay. Now, if you're really good, like I say, and the market is really moving back to the upside, okay, but let's say, for example, we are, you know, say still bearish, then there's nothing wrong with looking for opportunities to take, you know, bullish entries or long opportunities, I should say, okay? Because the moment price turns and we get a reversal to where it went from we had bearish structure to now we have bullish structure, then you can look for longs, all right? You have to think about those type of things. And when it comes to charts, I mean, there are so many different charts to actually trade. You know, you got range, time, tick, volume, wrinkle, whatever you trade, and you may trade different time, higher time or lower time or higher base or lower base charts, whatever the case is. So they're going to be set up, you know, like on all charts. So, you know, people can't really, just because if I trade range charts, someone trading time-based charts may not see the same zone that I'm trading from, okay, unless they go to the range charts and understand and see it, because oh, okay, yeah, that makes sense. But no matter the charts you trade, whatever works for you, stick with that, okay? Some people just aren't going to understand, you know, if say, for example, I trade range charts and they trade in time or they trade in volume or tick, whatever it is they're trading, whatever their trading style is, maybe they don't even trade supply and demand, maybe they, you know, have some other way of trading, they're not going to see it the same way you do. And anybody watching this video who can't understand, particularly like, say, for example, how I trade, because maybe you are in the process of learning something from someone else, it didn't work out, give other things a try if something's not working for you. Again, there are people who have found definite success in what I have been covering and pounding for months and months around the supply and demand and strategy, how I trade. So it's up to you to give it a try, to educate yourself, because that's the reason why I create this content. I don't have a training course or trading course or a mentorship program. I put this information out here publicly so that people, and don't charge a dime for it, but so that people can educate themselves, you know, because that's how I did. That's the best way I feel like people should really go about learning, is educate themselves, because there's so much stuff out here and so many corners you can turn to, and you may spend a few thousand here and it don't work, and all this money that you spend and you're just spinning wheels and it's not working. That same money you could have been using to fund your account with. But just stop being so anxious and the need to always want to be in the trade. So I'm just going to simply show you how to eliminate that, how to cut that out. Really, I mean, simply is truly just being able to read the market. You know, the market's been in a bearish down cycle or downtrend the last few days. And so if, you know, like I tell most people, especially beginner traders starting off, then just look for your opportunities to go short at areas of supply. You know, every time the market breaks structure below to the downside, then look for opportunities to go short. So, excuse me, for example, we'll just go to the 13th right quick, and we can see where the market on the 12th was moving higher. So we broke structure to the upside. Okay, you see that? And then we had to pull back and push higher here and made a high. But then we turned back around and we broke right below this area here at 18,443. So what if we broke structure there? That should tell you that we're doing what? Okay, this is the first structural break back to the downside after being, you know, slightly being bullish. Then that should mean I could look for what? Shorts going now. So that's why I marked the supply zone right here. So it pulls back to that area. You look for an opportunity on your lower time frame, because I mark my zones again off my higher base chart. But I look for the remaining part of the strategy, which I talk about here on the channel. So please watch the videos. I look for that remaining part of the strategy to unfold and take place. And once I get that confirmation of rejection, I'm going short. And then the market does what? All right, it breaks lower, makes a low here, and then we just kind of start chopping or moving to the downside. See that? Okay, and then what did it do? It broke another area structure right here below. We broke down here at 18,324. Boom, market pulls back. What is this? Supply. Aggressive selling. When you see those multiple stacked up candles to the downside, you got to understand that is aggressive selling. And who's doing that? The banks and institutions. So we're just looking for the ride going back down when the market comes back to this area right here. Look for rejection, but you got to be careful. Like I always state, and looking at price action, look, there was support resting right below. This is the imperative part that I talk about, where the market broke structure right here. What's below it? Support. Okay, so if the market pulls back to a key area of supply, I'm not saying you can't look for an opportunity to go short, because you can. And there were individuals that took this same trade when it got back up here to around 350, 18,350 on the NASDAQ 100 futures. They went short. But you got to understand that trade is going to be very short-lived in a sense, because we have support right below us. So if we have support right below us, what does that mean? That means that the market could come back, it could reject this area, come back, boom, break back to the upside, and which it did. But it pushed a little higher, and then what did it do? It came back and broke structure back to the downside. This is another structure break here at 18,303. As long as we are continuing to break structure to the downside, to just look for your opportunities to go short. Again, this helps eliminate the unwanted need of always feeling like you have to be in a trade. Wait for bigger moves on higher base charts, okay? And then mark your zones that way. That's going to give you more room to be able to trade from as well by the time when the market gets back to that key area of supply. We're bearish. We're breaking structure lower. Look for supply setups. So then the market turns back around. What does it do? All right, we start making slightly higher highs and higher lows. This is an area of structure right here. When it broke above this area here at 18,385, okay, then it's like, hey, you say, Mike, you said when it breaks structure, then we can look to take trades in the opposite direction, right? That is correct. But this is a demand. Well, I'm not going to say, well, it is demand that came off this area right here, which aided in the break of structure at 385. So this is a demand area, and you can take it back up to the highs right here. But again, according to price action, look and reading price action, you got to be very careful what's resting right above here, which is what? This is an area of resistance. So even though this came back down to this area of demand, okay, and this is a tested area of demand, you can look for the rejection and take it back up to the highs right here. And it did break above and wick out above the high. Reason why did it stop right there, okay, and come back down is because we have resistance right here. But, you know, we're still bullish because we broke structure to the upside, right? But overall, these are just minor structure breaks back to the upside. So in terms of the bigger picture, this is a major high resting up here at the top up here, resting at 507. So when the market starts to break back above, this is classified as as minor or internal areas of structure breaks back to the upside. You can still look for opportunities to go long, but the major direction is still shifting to the downside at the moment. Okay, now we haven't broken this area up here, so again, you can still look for opportunities to go long as long as we continue, to break structure to the upside. And we did. You know, we pulled back here, broke structure again to the upside. What did we break? Let's see here. Okay, broke above this area here. Yeah, we broke above this area here at 405. Okay, and then the market started doing what from there? Okay, it pushes higher here. It runs up against an area, another area of resistance before it starts, plummeting back to the downside here. And that's what it's been doing since. So from the 13th of March, moving into the early hours of the 14th, around London session time, that's trading the London session, the market started moving lower, and then we started breaking, let's see here, structure back to the downside right here. So the market here, you can see where it's moving down lower, okay? It pushes up, break structure here. So what is this down here right here? This would be an area of demand right here. You could have taken this trade back up to the upside here, back up to this high right here. But then it turns around, break structure lower, and then it moves lower. So this is what I'm talking about, being able to read the market. If you are struggling doing this and can't understand what's going on with price movement, the activity, seeing the structures, reading structure, then I don't care what strategy you have. I mean, eventually your luck is going to run out, and then you're going to actually start taking some losses at some point. This is the reason why structure is what it is. I mean, you have to be able to see this with your eyes. This is pure price action at its best, being able to read the charts. And no, you do not need any indicators to do this at all. Okay, I mean, you don't need nothing, to be honestly, you can trade pure price action, and some of the best traders in the world trade pure price action, and that's all they need to trade. Okay, now I'm not saying you can't have additional small elements or components that may aid you in your trading. Maybe something with level two data that kind of shows you can pay attention to, maybe to the order flow, in a sense that the orders hitting the books on both the bid and the ask. But that's a more complex topic, and I don't particularly pay attention to a footprint or a ladder, and pay attention to the orders hitting both sides of the books and all that stuff. I'm a pure price action trader, so I trade based on what I see going on my charts and activity wise. Can looking at those other elements or components help or aid in the trading? Yeah, but the reason why I like my trading to be simplistic and just trading based on looking at structure and price action on my charts, every time I have to add something new and pay attention to it, my eyes are here, my eyes are there. And it's like I have so many, you have so many things you have to look at. And then by the time, I get into a trade, I may miss half the opportunity, all right, and got into the trade too late. Or it may cause me to end up getting into a bad trade because, sometimes one thing may show you something, and then something else may show you something totally different. And when the two don't kind of come together, trust me, I've been there, I've done that, and that's why I had at one point so many indicators on my chart that it just became confusing to me, to the point where I said, okay, let me go back to ground zero and start over and be able to take a look at things from a broader perspective and really fully understand what it is I'm missing. And it wasn't until I truly was able to read the market, studying market structure, and really following the ebbs and flows and being able to see, understand price action as well, following the market as it was making its moves. That's when things really started to make sense to me. But anyways, we can see the market broke structure and it kept, moving to the downside. So when the market's breaking structure to the downside, then we're looking for opportunities to go short, right? So it broke structure here, came down, but then it turned back around, it made this move right here, boom, broke structure back to the upside. All right. So yeah, there's opportunities to look for opportunity to go long, but again, opportunity to go short just as well. Why? Because there's supply here, but there's demand right here. So people say, all right, well, the market broke structure to the downside and we're in a bearish movement to the downside. What do you mean you're looking to go, you were taking a long right here or a long back down here? Because they're areas of demand, and I'm not telling you to take those type trades, but yeah, it's counter trend trading against what's going on overall when it comes to the structure of the market right here. Like this right here was a supply area, but the market did break structure back to the upside right here. Okay. And some people will say, well, it didn't climb above the VWAP. So why are you looking to go long back down these areas right here versus going short because it stayed on the VWAP? I have the VWAP on my chart. And yeah, you could use it as an extra means of, like I say, tertiary tool, just an extra tool to use that may aid you or guide you in the direction in which you want to trade. So if you use, say, the VWAP or some means of a EMA or SMA and the market's staying under that and it's trending to the downside, that's just something extra that will help you guide you in that direction. But I look at opportunities according to, okay, is there supply here? Yes, aggressive selling. Is there demand here? Yes, aggressive buying. But I'm paying close attention to what happened with structure and price action, okay? Are there areas of support and resistance below or above which I'm looking to take my trade from? Okay. So if I got in this trade right here, boom, it comes back to this area of demand right here. We broke structure to the upside. This is a demand area right here. Okay. But even though we're moving to the downside, there's nothing that's really going to stop me back up here until I get to the tops, the market to the tops up here. And that's why I would have taken, if I got the rejection, to go back long to the upside up here and test the area of this high right here. And then it continues going higher. Why? Because it wanted to go up there and test that area of supply resting right here. Rejects it, and then we start moving lower. Yeah, okay. We're still following the overall direction of the market. But again, there's still opportunity to trade and look for areas of like a demand area right here. Okay. The market is moving to the downside here. This is still an area of demand right here, but I just have to pay attention to what was going on as the market was retracing and moving back to that area of demand. I talk about this so much. Okay. Again, if you have a hard time and paying attention to price action as it's approaching an area, example here, this is demand, but we're bearish, then trade in the direction of the overall market is what I'm trying to say, and stay in that direction until you gain more experience to be able to understand what's taking place and why someone would have traded this area right here. Okay. So And again, we move up, we break structure below this area right here at 201. And then we just keep moving to the downside. Another structural break here at 161. So there's areas of supply resting here. Let's see, we got another structural break right here to the downside right here below it at 129. And I believe this was the actual, this was the trade I took today that I posted over on the Discord right here. Supply area, yes, it's tested already. It's low probability, but it still worked out. Okay, that's why I moved down to my lower time frame chart. Look for the rejection, which I talked about in the video earlier today that I posted. So if you haven't watched that video on that trade, I would highly recommend you going back and watching that video as well. Then what does it do? So then we have another structure break right here below 18,030. Boom, we break lower. This is off the higher base chart now. I mark this area right here. Okay, it can pull back, right? This is a supply area. Get the rejection, you can go short. You see what I'm saying? And the market runs lower. So now the market is moving higher, as you can see here, to the upside. So I'm just trying to get you to see, but if you really squeeze things together and you really were able to use, I like to use a trend channel, you can see that, yes, overall we were just chopping to the downside since the 12th moving into the 13th, just the last few days, okay? So if you're someone that's new to trading or beginner trader, do yourself the biggest favor. Learn market structure. Don't learn anything else until you master market structure, okay? That way you can focus on and concentrate on being able to read the market. Once you've mastered how to read the market, everything else is gravy. You're 90% of the way there, and you really need, unless you really need to kind of tighten up on some areas of psychology that you may be, dealing with, fear, greed, anxiety, or whatever it is that you may be dealing with in that realm. But being able to read the overall direction of the market is definitely 100% going to help you in taking better trade setups. But I wouldn't focus on trying to look for, every opportunity. What I see people doing over in the Discord, they say they see people taking trades and say, "Oh, why did you take that trade? The market is bearish." I get that all the time because I see something that they don't see. We are all not going to see every opportunity. Trust that, okay? And there's nothing wrong with explaining to other individuals the trades that you took and why you took those trades, okay? I do that all the time. And then people are like, "Oh, I see why you took that trade now." But some people may never get that. They may never understand that because, again, their mind is tracked or trained to look at things one way. The market's bearish, so I'm bearish. And that's fine. There's nothing wrong with that. Actually, that's probably a good thing to actually do because you're only looking to take trades going short because you're bearish. But, with experience and time, you'll be able to see opportunities on both sides of the fence, meaning whether it's going long at demand areas, even though we're bearish, or taking shorts, even though the market is moving to the upside, looking for supply setups. You can still do that. But the biggest thing is understanding, being able to read price action as the market retraces back to that zone. People always ask me, "Why you take that trade?" Take that trade. Or what would happen is people will send me screenshots of trades they take. And then I say, well, I can't, I'll say, "Why you take that trade for?" And a lot of times what I've already seen, by the time they respond again, I could tell. I could look at the chart real quick and determine, no, that's not going to work out. I tell them why it didn't work out, because one thing they failed to do was pay close attention to price action when it was getting back to a zone. They didn't see an area of support right below or an area of resistance right above. And what happened in turn, the market came back and stopped them out real quick. Okay, you have to. There has to be clearance. There have to be, an area in which you're trading from, so you can capitalize and gain profit or make profit off that trade. If you got support resting right below and you took a supply setup, guess what? You may get in for a few good points, a couple ticks before it stops you out, comes down and hits support, boom, blasts up to the upside and stops you out, and then vice versa. If you're looking to go long. So, anyways, I'm just here to tell you that stop spending so much time just feeling like you have to be in the market all the time. Stop clicking the mouse all the time. Patience is key to this whole business, and I get it all the time. People say, "Man, I appreciate you being able to explain the whole patience part," and I see that you don't take. You're very cautious about the trades that you take. I do. I have to see things unfold. I have to be able to read things, and I don't take every trade setup. And some people say to me, "Well, how come you didn't take this trade?" Well, just because I didn't take that trade doesn't make me a bad trader, right? I just didn't either one, see the trade, two, sit in front of my charts. I just chose not to take the trade at all because I was really looking at something else. So whatever works for you, whatever you see, we don't all see the same thing. We don't all see the same setups. Trade what you see and what's going to work for you. Okay. But that's all I have today, guys. I just want to kind of just touch on that. People are just being so anxious. So stop, please. Do yourself a favor and give yourself time to breathe. Okay, if you're getting confused, step away from the charts. Come back to it with a clearer vision. Take a walk. Do something else. Maybe from a physical standpoint that may clear your mind a little bit. Okay, but outside of that, that's all I have. I appreciate each and every one of you for watching the videos daily. And if you're not a current subscriber, please take the time to go ahead and click on the sub button below. Make sure to turn on all your post notifications so you never miss one of the uploads. And last but not least, please drop a like on the video. But yes, also I want to say, if you're interested in joining the Discord, make sure to scroll down below and you'll see a link that says it says join the Discord. There's a link. Okay, click on that. You can join the Discord for free. If you're interested in becoming an elite member, people always ask, make sure to click on the link below it. It says become a elite channel member or elite member. Once you click on that, 2 tiers will pop up. Make sure to choose the one that says elite channel supporter if you're interested in gaining access to the private trade breakdown videos as well as the video playlist. So those are just basically perks or rewards that you receive in return for signing up for one of the YouTube tier programs, and you just basically support me as a content creator by providing so much valuable content. Now, the trade breakdowns, I will say this: they are trades that I've taken to where I've broken them down so that you understand just from my mindset why I took those trades. It has helped people tremendously, and it just gives you a broader perspective so you can understand the strategy more so you can understand what I was thinking leading up to the trade, why I took the trade, because I go over all that as far as stop loss placement and profit target areas, and just talk to you, as if you're sitting next to me, why I took the trade. Okay, and it has helped a lot of people out. So anyways, that's just $6.99 a month if you choose to do so or not, but it's up to you. Again, that link is down in the description portion of the video to become an elite member. Take care. I'll see everyone in the next one, and have a great weekend.